Next up on the stage is Phil Russo, Managing Director of Toubani Resources. By way of background, Phil joined Toubani in late 2022 to fast-track the development of the company's DFS stage gold project in Mali. Phil brings over 20 years of experience to the company across corporate strategy, project development and capital markets. Prior to joining Toubani, Phil held senior executive positions at leading mining companies including Barrick Gold, Dacian Gold and Perseus, as well as working at a US investment bank. Phil holds an MBA with a focus in mineral economics, equipping him with a strong foundation in both the technical and financial aspects of the mining industry. Thank you very much, Phil.
Thanks, Christian, and thanks for the opportunity to present the Toubani story here at Diggers and Dealers. We're on a mission to bring the Kabata Gold Project to life. We feel at this point in the cycle, this is the opportune time to advance compelling gold projects as rapidly as possible. And it's timely that since we listed the stock or the company at the end of 2022, we're at all-time highs now. So I think the market is basically waking up to the enormous value that we've got, but also the fact that there's a clear path now towards realising that value, and I'll talk about that in the coming slides. But the company is moving at quite a lot of pace. There's a hive of activity going on. There's a second rig at site now. We're investing in our people, we're investing in our communities, and we're targeting a final investment decision later this year. I like to think the Toubani story is as simple as it can be for mining investors. We have risks just like every mining company up here the last few days has, but it's how we manage those risks, and again I'll talk to those. There's a host of attributes to it in our favour. Our story really technically can't be much simpler. It's an oxide deposit. If this deposit was sitting out here in Cal, it'd be mined 50, 70 years ago, but you can still find them on the African continent. And so that drives a really remarkable economic profile, and ultimately the risk reward for investors. I'll bring that to a close at the end of the deck. But recently we did a placement that brought in some strong partners, and I'll talk to you about how that's basically transformed the company, and that was done at 24 cents, and we're up 50% from that only a couple of months ago. For me, Kabata has a lot going for it. It ticks all the boxes. It's got scale, the capex is low, the costs are low, high returns, strong payback. These are company making numbers. This is what we're going to build a company off. Our job is to really go and realise that value, and realise that value on a per share basis. That's something that steers us in all our decisions. But if I can highlight the $3,000 an ounce attributable value to Toubani there, $1 billion Aussie, and it's going to spit out $250 million in annual free cash flow at $3,000 an ounce. And so that's what's driving us. We're custodians of this project and really to bring our vision to reality. Just a company snapshot. So we've got one of the strongest institutional registers, I'll argue, in small cap land. Follow the smart money if I'm you guys. And like I said, we're 36 cents today. Yesterday we were 33, and we're well funded. That institutional register goes a lot deeper than those key names there. That's basically 10% or above. But right now the options that were accompanying our recent placement would be in the money. So that's an interesting dynamic that'll unfold. But clearly, additional capital potentially onto the balance sheet. I think we've got a really well-credentialed team and board and management team. This team's growing at pace. I think you should expect to see more people coming through the door in the coming weeks and months. Good projects attract people. I'm excited about the team we're assembling. That gives us a lot of confidence in where we're going. So like I mentioned, in April we announced that transformational deal with A2MP. It was a $15 million investment, 18% of the company. Came with a non-binding debt commitment letter of $160 million US, which is basically the debt we're looking at as part of our project financing mix. We're now working to make that into a binding commitment, and I'll talk to you about that momentarily. But those are the sorts of attributes that A2MP brought, which really helped us on financing and network across the African continent, which I'll talk more right now. So A2MP, they're made up of Eagle Eye. Eagle Eye are becoming more familiar on the ASX, so in Canyon and Prospect. If you bring up those stock charts, you'll see the success stories there. And Afri-Exim Bank is a $40 billion US bank located in Egypt, whose mandate is to help companies and projects like ours. So gives us a lot of confidence in our direction, and it's very complementary skill sets. They bring financing and a presence in Mali, in other industries. So Toubani is leveraging that connection in Mali, where our presence is building in that country, where we see a lot of opportunity, and our technical execution capabilities and their financing and network. It's a powerful combination. So the Kabata project's in southern Mali. We're probably the closest mine to Bamako. There's some big mines in Mali, probably some of the biggest in West Africa are in Mali. And Mali is the second largest gold producer in West Africa. I'll talk to you about our approach in Mali because I recognise that it's in the headlines these days with some of our higher profile peer companies. But I'll talk to you about why we're having a different experience there. The Kabata DFS that we released late last year, really for me it hit all the right notes. It's a large resource, it's soft, it's free dig, oxide ore, 1.5 million ounce reserves, puts us in the big leagues, 160,000 ounces a year for basically 10 years. I'll talk to you again about how that's going to grow, both in annual production, but also I see extensions to mine life. And because we're oxide, you're going to see that our CapEx profile is really competitive. So really this all culminates in us having an executable project here and us trying to deliver that value that I talked about a few slides ago. So Kabata itself is it's near surface, open pit project. It's 5 kilometres of strike, 2.2 million ounces. We've got 90% of this in the indicated category. The weathering profile here goes down more or less 100 metres. That green in that image to the bottom right there is indicated. That's what underpins our reserves. This is a very well drilled deposit. A lot of capital's been spent there historically. And that flows into our reserves. So 1.56, like I said, that's using a $1,650 an ounce gold price. High margin, low strip, free dig oxides make up 80% of that reserve. That's what anchors this project. So yeah, a very what we call conservative but robust project. We're not trying to be cute with our technical assumptions. We're just moving the project forward. We designed the mine plan here to really repay back the capital basically as fast as you can. I know a lot of people say they do that, but in that stage 1A alone, you can repay the CapEx on its own. There's 5 stages here. It's less than 2 to 1 there in that first few stages. So again, simple mine plan. Our stripping profile there, you can see it benchmarks with other development projects across Africa. Here's our production profile, 162,000 ounces for 10 years. This would be the 5th biggest mine in Mali once built. Oxides, that's the yellow bars there, anchoring that first 6 or 7 years of production. Then you've got the fresh rock. That fresh rock there is all free milling material. What I think we're going to do is expand that yellow outwards and upwards with our exploration potential, which I'll highlight momentarily. Maybe one of my favourite slides. So I talk about oxide and the uniqueness of our ore. It's really underpinned by where we measure here in terms of hardness. The Kabata oxide ores really stands apart. Even our fresh rock screens quite well, and that drives our unit costs. So on a per tonne basis, we've got really the attributes here to have a low cost project, which also flows through into our CapEx. So our CapEx, again, Lycopodium did this feasibility study for us. we don't have that crushing and grinding circuit up front, which means we can do this for a competitive 216 million capex, which again means we've got an executable and fundable project. Again, this puts us in a competitive position. This is the capital intensity, which means we can carry debt, we can rapidly repay that debt, which is what you want to do when you're in Africa, is as quickly as you possible fund, build and repay your debt, and our profile allows that to happen. So from this point forward, what can you expect from us for the rest of the year? We've got 5 key value drivers underway to really de-risk this project towards a final investment decision at the end of the year. And that's in the approvals, engineering, permitting, financing and growth. On our agreements with the state of Mali, we're well underway on those. We think we'll deliver those in the coming months. The project will deliver significant benefits to Mali. They want to see this project succeed. I can tell you that in my meetings with ministers. And they want this to be a success story. So we're moving forward on that basis. We're submitting our ESHA shortly. Our RAP survey work is underway. Early works are being planned. And like I said, we're moving with the financing. We've got the independent technical experts coming to site next week. So there's a lot going on at this company, which really means a lot of news flow and hopefully even higher share price. It would be remiss of me if I didn't mention Mali, given the recent headlines. In Mali, you run your own race. It's clearly a mining country at heart. It has been for a long period of time. As a company, we've always taken the approach, what's the lowest overall risk for our shareholders? And that meant from the very beginning, we've been proactively engaging with Mali. We're on the new mining code that's highly topical in the market. All those economics I presented are on the new mining code. So you can clearly see that projects work on the new mining code. And so we don't have any legacy issues, we don't have any troubles or disputes. Our engagement with Mali is just about how do we structure this project and bring it to life. And you can appreciate that would be a different discussion when you're not sort of in the rear view mirror. On the exploration front, I'll just sort of bring this all together here. So while we're delivering all that de-risking news, the rigs are going to basically be turning now for the next 18 months. Our strategy is twofold. We're drilling below the deposit and we're drilling around the deposit. We're going to find more oxides and we're going to find more fresh rock at depth. There's 50 kilometres of shears here. We've only tested 11 kilometres of those so far. But currently now we're 3 holes into this 5,000 metre program. Again, it's never been systematically drilled below that deposit. So where you see those open arrows, that's the targets that we're drilling. We've got a diamond rig there. And so we're eagerly looking for assay results, potentially beginning next month. And then, so last year when we did an infill drilling campaign using the RC rig, we ended several of our holes in mineralisation. Here's 51 metres at 2.7 at the top of fresh rock. There's several holes like this where we didn't penetrate into the hard rock, which we're following up now. So, reasons for optimism, but we'll see what it yields. But again, exciting time for the company. Just quickly on our schedule ahead. So, the remaining part of 2025 here, we're going to be delivering these milestones. The rigs we've got that second rig just rocked up to site now, which is drilling the oxides around the deposit. So we'll hopefully grow those oxides, which will be supplemental feed to that production profile I showed. And we're on a pathway to bring this, deliver that first gold production in basically 2 years from now, if not less. And I'll end here with this slide here, like everything I've just talked and all the attributes that Toubani delivers. This is the strongest position this company's ever been in. So it's very exciting. And when you couple that with what we're showing there on the valuation curve, I think we're slowly going to creep up that curve to where we should be. I think that's the opportunity for the investors. And I would say it as a risk reward, the upside I think greatly outweighs the downside at this juncture. So I'm pleased to be able to bring that to the diggers floor at this time. Thanks, Christian.
Thanks very much, Phil.